Well, joining us now is Stephen Green. He's head of Greater China Research at Standard Chartered Bank. Stephen, thanks for coming in. Now, in a broader context, does this reflect what is happening over in China, that we are seeing wages going up, hours being worked reduced?
Yeah, I think so. Probably this year manufacturing wages are going up about 10%, a little bit less than last year. That's what clients are telling us. Over in the services sector as well, a lot of migrant workers going to restaurants. Their wages going up even faster, we think, about 15%. And interestingly, all these listed company results coming out over the last couple of days, you're seeing a lot of companies report higher costs, most particularly higher wage costs.
So tell me about this. This is not just, of course, localized to Guangzhou, for instance. Is it something that we're finding, well, sporadic, well, let's say bright spots of around China?
So absolute levels, so you can pay maybe 20% less if you're manufacturing in Chongqing vis-a-vis Dongguan in Guangdong, but it's everywhere. The whole of China wages are going up. That's what we're finding, and that's the result of having 30 years of fantastic growth, and the labour market, so the pool of labour is only now growing at about 1% a year. So if you're growing at 7–8% and you've only got 1% more people in the labour force every year, of course wages are going to go up.
And that means, of course, that China goes up the value chain as well. They have to do that, but that brings its own sort of pressing need for reform.
Yeah, I mean, if you're a manufacturing boss, you're going to get worried by this. Your costs are going up. You have to start thinking about what to do. Most of the people in a recent survey we did go and look at investing in capital equipment, replacing labour with capital. Some of them are moving inland. Very, very few people we found are moving offshore. But if you're an economist, it's great news because higher wages mean higher income for these folk who are working very hard. Higher incomes mean that they become more quickly consumers. So if China's
But that's the whole point, isn't it?
That's
the rebalancing of the economy, and as you go up the value chain, that's exactly what you should be seeing. But of course, it's not just one-way traffic, is it?
It's not. Well, I mean, when you look at productivity, so if you look at how much output these folk are making, you find actually the output, as far as statistics allow you to tell these kind of things, the output is going up at around the same pace as wages. So people are being paid for working harder and working smarter. And so we think this is a virtuous circle more than the vicious circle.
It is an ageing society, though. I mean, can it grow rich before it grows old? That's the sort of trite phrase that people use, but it is actually got some basis in fact.
Yeah, I mean, dependency ratios, number of workers supporting numbers of pensioners, that gets bad after 2015, so China will not get rich before it gets old.
The one-child policy, perhaps time for it to go?
Well, enormous resistance in Beijing for that. It looks like what they're going to be doing now is sort of relaxing it at the margin. So if you're one child and you marry one child, you can now have two kids. Maybe next year or the year after, if you're one child and you marry someone who has a couple of brothers, you can then have more than one child as well. So
it gets
relaxing at the margin,
really, doesn't it?
It gets very convoluted. Yeah, and in the countryside, of course, most local governments don't really hit you if you have two kids. They get nasty when you have 3 kids.
Right. Well, what happens at longer term? How does this affect growth?
Well, it brings growth down, brings potential growth down. So China moves from growing on the back of more labour and more capital. You have to move to an economy which grows on the back of being smarter, productivity growth. And so that's the thing that we're all debating at the moment in Beijing. Can we drive through another wave of reforms, open up the service sector, protect IP in order to drive productivity growth over the next 10 years? If not, China post-2015 will look a lot more slow, a lot more rigid, and a lot more vulnerable to shocks.
Just very quickly, one other point I just want to ask you, which is, this time last year all we'd probably be talking about was the yuan, the RMB, and how much does it actually appreciate. It's not, again, a one-way bet there, is it, anymore?
No, I mean, you've got a lot more two-way flow in the onshore FX market. I mean, we at Standard Chartered think we'll probably do about 1–1.5% appreciation against the dollar this year, but it's going to be a lot more volatility. PBOC looks like it's signalling they want to open up the band, to broaden the band. So I think more volatility, but pretty much by the end of the year we'll be a stronger renminbi than we are today.
Around about 1%, round about the same is what you're suggesting, really.
Yeah, 1–1.5%. Not a depreciation, though. No way.
Okay. Stephen, thanks for joining us. Stephen Green there.